Whoa! What is it good for? Absolutely nothing. Unless you're Scruff and you'll make a video about it. Well, hello boys and girls. 'Twas the night before Christmas, and all through the house not a creature was stirring, not even a mouse. And that's because Winky said to Scruff before she left the house today, if she comes back to a mess, I'll be worm food. So I'm staying in the study and doing a video. And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the overgrown child that is the Scruffy Trader. Now today's video is going to be on planning and preparation, and really just to give you something to think about for the new year coming forward. But before we start, just a little bit of housekeeping. If you like all things trading in real time, please subscribe. It genuinely helps the channel. If you've got a query, by all means contact me, either in the comments below or go in the description. You'll find all my contact details as I answer every single one of them. And then finally, if you get a direct message from Instagram or Twitter claiming to be me, selling signals or a course or looking for some form of investment, it's not me. It's something I would never do. I don't sell courses, I don't believe in signals, and the services that I do offer are done by word of mouth. I never direct message anybody. So, a little bit of a somber note, but it's a sad world that we live in. So what am I chuntering on about today? Well, I've got my coffee, because if you're going to prepare something, this is probably the best tool you have in the bag. And I know you scratch your head and you think, how's coffee a tool? Well, for me, one, I've got a borderline addiction to it, because we all know Scruffy likes a coffee. But it slows you down. If you're looking at a trade and you think to yourself, should or shouldn't I? Go put the kettle on. Because how many times do you go into a trade on a whim? It immediately goes against you and you sit on heat for a good hour to 2 hours before it even shows any sign it's going to move for you. So really, is boiling a kettle killing the moment? Probably not. So it's actually the first tool in the bag is a cup of coffee. It also lubricates the brain. You don't have to have coffee, you can tea or whatever your preferred beverage is. If you're part of the Scruffy Squad, it's normally, I think sometimes it's Alcoholics Anonymous in there, because there's a few of us like a bit of a drink, and on a night time it gets a bit fruity. So I don't quite recommend that while we're trading, although you have seen me with a beer on a few occasions. Anyway. Sorry. But what else does it do for you? Well, it gives you time to think as well. You know, and as I was saying in this example of a trade that is, it steps you out of the way of FOMO and things like that, because your emotions will play havoc with you, and they do play havoc with you. And FOMO, the fear of missing out, is a big one. Because you always think it's the one. It has to be. You know, for whatever reason, you'll almost create the perfect alignment just so you'll press the button. And that's wrong. What you need to do is step back 3 or 4 steps and then, well, make an informed choice rather than a frightened choice. Coffee can help that. Right. So what I'm going to do is I'm going to jump on the whiteboard and I'm going to give you a few things to think about in order to build up a plan. Now, it's not strategy. You see, and I'll touch on this before I get on the whiteboard actually. Whenever anybody contacts me, they brush aside all of the preparation of the trade. All they want to know is where to get in, how to get out, and where to place a stop, sort of thing. Which is fine, you know, because you do need to have these parameters. And I have a certain criteria that I use. But it's about 5% of the trade. The trade is made up from analysing a top-down approach of the chart. So you need to look at your high time frames. So if you're trading a 5-minute chart, which is fine, what does it actually tell you? Not a lot. It's actually just quite a bit of noise. You need to be looking at your hourlies, your 4 hours, your daily. If you look at those, sort of, you can go out as far as the monthly, you know, but if you're looking at the daily, the 4 hour and the hourly to get an overall feel of the market, you should know what your direction is off those 3 charts. Then you can go to your 5-minute and apply whatever system you have in place. So you've actually entering the market with an informed choice. And that's where your coffee comes in, because you're going to spend 10-15 minutes looking at your charts. So mark your daily up, mark your 4 hour, mark your hour, mark your weekly and monthly for that matter. But then you know where your levels are. You can see it, you know, and whatever anybody tries and preaches to you, levels are king. Why? Because the price is driven. It tells you where the market reacts. And that's what you need. A 5-minute chart can't do that, because the levels within a 5-minute chart, they're too weak. Even a 15-minute chart are too weak. And I watch these scalping videos over and over. And they're fun. But you're never going to make any money from it.
Are you serious?
Okay. All that'll happen is one day you'll hit lucky and you're actually catching the trend, and it's like, oh, this is shooting fish in a barrel. But the next day, because the conditions are different, you get lacerated. And that's why you need to know how to pinpoint a trend, look at a range, and then look at the trend within a trend, you know, because that happens. If you're looking at a daily chart and you see it zooming away this way, it can pull back quite a way. So there's a trend within a trend. And then if you can find a range, there's a trend within the range. And you've got to go through all of this and understand what's happening at the moment of entry. And there ain't no mechanical system will tell you that. None. And I see them all the time. There's a few. There's do the London breakout. It's okay, but it's not a system. You know, it's not reading the charts. It's flipping a coin. There's a number. There's the early morning DAX trade. I did it for 4 months. Looks great the way it's sold. Doesn't make any money because it's a coin toss, you know. But if you read the conditions of what's going on in the market, then you can enter correctly. So it was just almost a rant with Scruffy, that one. It was really just to open your eyes to the fact that chart reading and understanding the overall picture is more important than pressing the button. On the point of pressing the button, you should already know your direction and have a good idea of your entry point and your exit point without any fancy sort of moving average cross, MACD cross or anything. You should be able to see it within the price. And if you can't, then you need to go back and analyze the chart again. All right, because just thinking that when this special moving average crosses that one, that's the time to go in. It's not. What you got to remember with indicators is they are an indication, not a definitive. and they are lagging. They are terribly lagging. So if you're in a trending market, a lot of the time you're late to the party. So you have to have various things in place. And I'm talking about day trading here, guys, not necessarily swing trading. Because swing trading's slightly different. Because of the level of the moves in a swing trade, in other words, they're so much bigger, you can still grab 40 to 100 pips quite easily on a swing trade, even if the move is 300. Because how many times do I tell you? Don't look for the bottom third. Don't look for the top third. Look for the bit in the middle. Now on daily charts, you can catch that wave, that middle bit of wave, and get a decent amount. And for me, swing trading is 50-50 mechanical, the other 50% is reading the charts, because I'll read the chart. If I think it's good, I'll look at what the mechanical system tells me and I'll go for it. When I'm day trading, I am reading the charts fully. There is very little mechanical setup within it. I read the chart, I understand what I need to get out of it, and then I use certain indicators to help me fine tune. But I already know what I'm looking for before those indicators are laid on the chart. Strange way. If you're interested in seeing how I do it, check the Scruffy Squad out, because I try and analyse and show the guys how I read the charts there. So let me jump on to the whiteboard and I'll just give you something to think about, just for a couple of minutes, the way I look at things. Because to me, the art of trading is almost like the art of war. And you need to know yourself, you need to know your enemy, and you need to know what the battleground is. So let's jump on the whiteboard and we'll find out.
Well, we're waiting.
Okay guys, so let's have a look at this objectively. Now I'll only spend a minute or two on this, just to kind of give you some food for thought on what you need to think about. And then as I go forward, depending on your comments, etc., I'll expand on it. And certainly in the Scruffy Squad you'll see this expanded, because this is roughly a watered version of how I look at the charts. Okay, so you'll see I've got two quotes here, and I mentioned them just a minute ago. And the first one is my favourite quote of all time. Know thyself. It is the beginning of wisdom. That's the full quote. Why is that important in this situation? Because that determines how your trade's going to play out. If you're quite a patient, methodical person, you can let it unwind naturally, and if you see it on the screen, you're not really going to panic. However, if you need loads of action and you constantly want to fiddle with something, you'll fall into FOMO, and then that's something you need to work on, because the emotional side of your trading is the first thing you need to look at. And it's all, how do I put this? Trading in a nutshell is all about filters. You need to filter your personality down. You need to filter the markets down. You need to filter the type of trade that you're going to take today. Range bound, trend bound, momentum, pulse, all these sort of different things. And these are things that you need to look at. And then the other quote running on from that is know your enemy. Because I said the art of trading is very much like the art of war. And if you're going into war, you need to choose your battles very carefully. So let's have a little dive into this, and I'll show you what I'm talking about. So the first thing I said was filter. All right? And that is number one, your filter. So what's that got to do with the price of bread? Well, the first part of that filter is you. So you are the first filter.
No way!
And that is probably going to mind blow a lot of people. Because I don't get it. You've just touched on patience and sort of fiddling. But what am I filtering me for? Well, there's lots of factors to filter within you before you even look at a chart. The first one is your personality. You know, can you deal looking at a chart moving up and down? If you can, and you're quite patient, you're on a good stead, because the markets will suck you in when you least expect it, because you'll see it moving and you think, I've got to get in, I've got to jump on the train. So you'll press the button. But what happens is, the second you press the button, the market goes the other way. Why? Because you've traded from a point of fear. You know, you try and catch a moving train, it'll rip your arm off. And that's why levels and things like this come important, because it slows you down, you know, and they become train stations. That's where you get on your train. So that's the first part, figuring out your personality. Because if you are tending to flicker with the screens, the best piece of advice I can give you is place a stop, place a target, switch the thing off and walk away. And then come back an hour later and see what's happening with the trade. Because what you'll find is you'll sit there for that hour watching the candle dance up and down, and you'll panic. You might get out at a small loss thinking that you've got it wrong, or you might see a very small profit and you snatch the profit when in fact if you let the candle close it might have run on another 10 pips. There's all these little things and little tricks that you need to master, and that comes from you. Now there's another part of this as well, because for all you're filtering you leads into time. And you'll go, what's that got to do with me? Well, it determines when you can trade. See, if you've got a full-time job, you can't necessarily be a day trader, because you've got to go to work. And your boss mightn't like it when you're just playing with the charts all day instead of actually doing your day job. So time is a filter as well. It will determine whether you're a long-term trader, short-term trader, and it'll also determine what type of chart you're looking at. If you haven't got time, you need to be looking at a 4-hour chart or a daily chart. If you've got lots of time, yes, you can analyse it and go down onto a 15-minute. So time is part of that filter process. So if we're filtering me, what's the other side of the coin? You're filtering the trade. Okay. So the next part of it is the trade itself. And this is where know your enemy comes into it. Because if you're going to win a war, argument, battle, whatever you want to call it, aren't you better to be armed well? Now obviously if you're going into battle, the greater number, the greatest armament will normally win. If you're going into an argument, it's the one who's most informed. And these are the principles that you need to kind of adopt. Now, know your enemy is exactly it, and choose your battle. And this is what filtering is all about. So if you're looking at 28 pairs, the various different indices, God knows how many ETFs, commodities just run on, and then shares run forever. How can you filter that? You can't, you know, because you couldn't concentrate long enough throughout the day to analyse the whole lot. So the first part of the filtering process is filter what you want to trade. Am I going to trade FX, commods, share, ETF. You're starting the filtering process. Right, I'm going to trade FX. It's 28 major pairs. Then you have the exotics. Too many. So you can filter it right down again. You can say, right, I'm only going to trade my native currency. So I live in the UK, so I might only trade the pound. And why is that? Because the British banks are open when I'm trading. Common sense. If I live in Australia, trade the Australian dollar against whatever. Why? Because those banks are open. Very, very simple process. But then filtering it to maybe 3 markets. So you'll have 3 blocks. So you've taken all of these markets, you've broken it down individually into the type of market you want to trade, and then broke it further into 3 markets that you can handle. And why do I say 3? Why not 4, 8, 10? Well, it's just a nice round number in fairness, because you can quickly look through 3 charts over an hour before you start trading, and of those 3, at least one of them should be able to give you 1 trade. Now if you're only looking for 1 trade a day, that's your battle won, because it means you will become a sniper, and when you're in war, the sniper has the biggest kill count. You know, alright, you can say you can drop a bomb on it, but that's not really a skillful art, whereas the sniper is. And what I'm driving at is, you're drilling everything down to a point that you know you're going to win before you enter the market. So you've kind of filtered down your personality, you've filtered your trades, you've worked it all down into 3. And then from those 3 into 1. And then you should know that inside out for the day that you're going to trade. Know your enemy. So that's the first part. You've filtered everything down. But there's another filter. And the filter is for this chart here. So let me have a look. I'll show you. Just clean this all down, because I'm obviously domesticated, boys and girls. Just not very well, as Winky will constantly tell you. Alright. So what's the filter part 2? What's the chart itself? So you need to break that into 3 parts as well. So we're talking 1 chart broken into 3. 3 rather. Why? You need to pick your direction. And the way to pick a direction is by confluence. And confluence comes from multi-time frame analysis. So you might look at a 4-hour chart and a 1-hour chart. And what you're looking for is the market going in the same direction on both charts. Now if you've got that, you now know the direction. In other words, it could be something as simple as above a moving average. Say, I don't know, both of these are a 50 MA. Alright, so your 4-hour and your 1-hour are above the 50, and you can see it moving up. Alright, because you've got to use your eyes as well. You've got a bias for the day. You know, very simple bias, but it's a bias. So you're now coming onto your 15-minute chart with a bias of going long. Why? Because these two have just told you that. right? So you've got your chart moving like so, and you can see a level here, and a level there, and a level above it. So what's this got to do with what's been talking about? Well, we have to be patient. Why? Because what's the point of getting in there? We know when a market breaks a level, tries to come back and retest. So why not get in here? Which means you've got to wait for that to come down. Simple stuff. So where's my target? Well, my target is here. So I've got to wait first of all for it to come and retest the level, and then I have to wait for it to work its way up to that level. Now, if I'm a fidget, I might pull it out here. Well, if I do that, I've missed out on all of that. So I'll go back to what I said at the start. If you fidget, switch it off and walk away. Now in this instance, you could have a pending order here, the target up there, and you can place your stop on the other side of there. Why? Very simple. We know markets oscillate. Solid levels can push a market away. So you need something to protect your stop. That's your level. You need something to get in. Well, that's the other level. You need something to get out. That's the level above. And all of this pieced together creates a form of a strategy and a plan. And you started with you. And I know that sounds odd and this is a strange way of looking at things, but it's the way I look at it. You know, I know what my personality is. I know how to read a chart. Then that chart is derived from knowing what my enemy is. And my enemy is just the markets. And it's that simple, guys. And the whole idea of this video is to get the grey matter thinking about this. Because so many times I see the glossy adverts all the time. I will show you the perfect system.
They've done studies, 60% of the time it works every time.
It doesn't exist. Markets are dynamic, they change constantly. The landscape that you work in changes constantly, and you have to change with it. Now, the one thing that's constant are levels, because they've been fixed in time, and the other constant is multi-time. Why? Because you're always looking for an echo of the past to give you a vision of the future. And if you can go into it with an informed choice, knowing how you're going to manage the trade, you'll succeed. And trading is that. It's about managing trades and pre-planning. Not so much how you're going to get in. That's the easy bit. But why you're going to get in. That's the hard bit. Because you've got to know why you're going to trade a market. You need to know why that market's moving in the first place. And you need a rough framework as to where the price is going to go. And that's what your levels are. So there you go. Something for you to think about. If you're stuck, drop it in the comments below or email me. I'm very easy found. And I'll be interested in your thoughts, good and bad. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.